Hello, Andrew Myrams from Intuitive Finance. Well, what's happening in our markets? Well, we're starting to see some moderation in price growth and clearances at auctions in both the Sydney and Melbourne markets. Very clearly, this is what the regulators have been trying to reduce the exposure and the investors in those markets. So we've seen a mild softening in those couple of markets. And what are the things that are driving this? So regulatory controls have been around restricting banks' growth 10% year on year on their investor book. We've seen in the last month or two, now the real focus is on interest-only lending and also living expenses, getting a greater handle on people's expenses and what they spend from a day-to-day and month-to-month basis. With interest-only lending, what the regulators found was this was unusually high to world standards. World standards is about 30% of all lending and inflows is interest-only, and Australia we were into the 40% region. So there's been some real restricting around that. Lenders are withdrawing from the market, reducing LVRs, forcing in some instances people to pay principal and interest on higher LVR loans. And the greatest disincentive for a lot of people will always be interest rates. And we're now seeing interest rates from a principal and interest home loan that you can still get in the high 3% region to an interest-only investment loan now in the 5s. So great disincentive for people not to invest, but also just to consider all your options around principal and interest only and what is the best outcome for you. That said, there's still lots of things happening in our markets. It's still a really good time to be investing, but the quality that you select is now more important than ever. Good luck with your journey.